Michael Burry bought this energy company and he might be regretting it. Generac Holdings provides backup power generators and solar power storage that helps people retain power during extreme weather events and blackouts. Revenues soared during the pandemic as people stayed at home, with a number of power outages occurring particularly in Texas and California. However, revenue growth has slowed from 50% in 2021 to negative 10% over the last 12 months, and the stock has crashed 80%. Despite that, Generac is consistently profitable and reasonably valued. With an enterprise value of $7.6 billion, the stock is trading at around 13 times ebitda, and net income at $189 million will benefit from the removal of a one-time expense of roughly $100 million. Furthermore, the effects of climate change and a fragile power grid should keep demand for backup power generators and storage in a strong upward trend. Not only is climate change creating more extreme weather events, the switch to renewable energy sources will put more pressure on local power grids. According to Fortune magazine, 2/3 of the country are at risk of power outages, and there's been a clear increase over the last 20 years. Let's assume that Generac can grow its top-line revenue at 10% per year for the next 5 years and then get its net margin back up to 10%, which is more in line with its historical average. In that scenario, Generac would be generating $6.4 billion of revenue and $640 million of net income in 5 years' time. A 20 times multiple on that figure puts the valuation at around $16 billion. That works out to an investment return of over 15% a year. That looks like an excellent return, however there is a problem. Generac is holding a significant amount of debt which could depress earnings by around $400 million over the next 5 years. But more concerning are the consumer reviews for Generac's products. A tour of consumeraffairs.com shows a large number of unhappy customers. A similar story can be found on Trustpilot, and this solar company said that it no longer recommends Generac products. That's a problem, especially when you have intense competition from the likes of Kohler's, Chinese manufacturers and Tesla. All of this may explain why sales of residential products are currently down 30% year over year, even though marketing costs continue to increase. If Generac can improve the quality of its products, then this stock might make for an attractive investment. But until that happens, I give this stock a negative rating. But these are my personal opinions, not financial advice, and I've got no position in Generac. For more videos like this, check my new website at 3minutebreakdowns.com, and thanks for watching.